All right. Good morning, everyone. Welcome to this TradeStation Masterclass. Thank you guys for taking time to be here and learn a little bit about the TradeStation's functionality. For those that are new to the TradeStation Masterclass series, my name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. I do this all the time, and the reason why we do this is because we want all our clients to have a good grasp on TradeStation's technology and be able to focus on what they do best, which is trading the markets. Today, we're going to learn about one feature of TradeStation that allows you to look at different time frames and different symbols in one technical study. Sometimes it's challenging because studies are usually calculated on just one symbol, but the ability for you to bring in other like different symbols or even different time frames in the same calculation is something that is interesting and that also allows you to create more robust studies because you are confirming ideas across different symbols and across different time frames. So the title here is Create Studies and Strategies Using Multi-Data Streams in Easy Language. The chat is open. Sebastian, I do remember that you sent me an email. Yes, if we can, we'll do it right after class. I'll answer your questions. You may have to refresh my memory because I do remember seeing your email. I just can't remember exactly what the question was. Okay. But on this topic, just keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, that active trading is not suitable for everyone. It should only be done with risk capital. Past historical performance is no guarantee of future results. And please, if you need additional information on these disclosures, go to www.tradestation.com/important dash information. Okay, let's talk a little bit more about this topic of multi data analysis and how TradeStation addresses the need of doing sometimes multi data analysis. So, we're talking about you having the ability to add or reference additional symbols or intervals in a chart. So data elements in TradeStation are referenced using the reserved word data in. We're going to take a look at how to set it up on TradeStation and how you reference multi-datas. But anytime that you add a symbol to a chart analysis, being the first symbol, TradeStation will assign a number to that symbol, and it'll be data and whatever number that is. So anytime you open up a chart, the first symbol that opens up the chart is going to be data one. Of course, you can change the symbol and replace what is stored under data one. But if you were to create a multi-data chart, the second symbol that gets added will be assigned this data number. It'll be data two. And it's important for you to remember that because that is exactly the way that you're going to reference the data for that symbol using its number. Knowing which number or which symbol is for what number or what number is for which symbol, it's easy on TradeStation and we'll show you that as well. But you can add up to 50 data elements in one single chart, which is pretty impressive if you think about it, because now you are capable of not only adding a second symbol, but up to 50 symbols and maybe create your own calculated index if you wanted to do that. Those are some things that traders would want to do, especially if you're keeping track of your portfolio with a particular calculation, whether it's a weighted average or a weighted index. You can do all those calculations by bringing in all those symbols into a chart and doing your calculations. You can only use time-based intervals. The other activity-based time frames like ticks, volume, all those are not going to be available for you to create multi-data charts. Only time-based intervals. So we're talking about minute, daily, weekly, and anything that is time-based. Examples. Here, value one is the average of the close for 10 bars. Whenever you don't, whenever you don't specify the data number, EasyLanguage will assume that you're talking about data one. So you can see that the word close here, of course, is taking a look at the closing price of the bar, but in a multi-data chart, you need to specify which data number. When you don't use the data number, As I said before, EasyLanguage assumes that you're talking about data one. So you're gonna, if you're a little bit familiar with EasyLanguage, you know that a lot of times we just say the reserved word, whatever that is, and EasyLanguage will assume that you're talking about data one. But if you're using multiple data, it is important that you reference that data number. For example, here we have value two, which is one of those pre-declared variables. And we're calculating the average of the close for 10 bars, but notice the modification here at the very end. Now it says data 2. So whatever calculation we're doing here for the average, we wanted that calculation to happen for data 2. And here's a third example. Value 3, average of the close for 10 bars for data 3, exactly the same. It just changes the data number. But this would be the way for you to say, okay, I want to use the same calculation, but I want you to apply that calculation to my data 3 up to data 50. Here's some additional examples. Here's an example of an indicator that calculates the difference between two data sets and the ratio between two data sets. Let's go ahead and take a look at it. You can see that at the very top, we have the inputs, and it's making reference to close of data 1 and close of data 2. Take a look. So remember that if you don't say or if you don't include a data number, EasyLanguage will assume that it's data 1. For consistency, sometimes when you're writing the code, if you say data 1, it's okay too, because a lot of times if you have a data 2, it just makes sense for you to include data 1 so that there's no questions asked and you know exactly what data your calculation is referencing. But here's a variable, it's called spread diff. So there's going to be a calculated formula inside of it. And you can see that spread diff A is one minus the other. Data series one minus data series two. And if we look at the inputs, we know that is the closing price of data one minus the closing price of data two. That's just a straight difference calculation. There is a spread difference indicator already built into TradeStation that makes that calculation for you. We're going to take a look at that next. And spread diff B is, of course, one divided by the other. So all the mathematical operators that you would find in a simple formula, the subtraction, addition, multiplication, and division are all available in EasyLanguage for you to make any type of mathematical formula. And here's just the plot statement where we are plotting the spread diff in that particular example. So this one, as I said, we have built-in indicators that do exactly what this example does. And we're going to take a look at those two indicators in just a moment. When you do a multi-interval indicator example, here's this code. Let's go ahead and take a look and break it down a little bit so that we can see what's happening. All right, so the input is just mo length. This is an indicator that calculates momentum. You can see the formula or the function right here in the middle two statements. The word momentum calculates momentum for any symbol. That's just the difference between the current price and a price in history. So if you look at Mo for D1 just represents data 1. This is using the close, and Molen is 13. So it's looking 13 bars back, looking at the closing price and calculating how much difference there is between the current close and the close 13 bars ago. That's how momentum is calculated. On MOD2, which is representing data 2, you can see that we use the exact same function, the exact same parameters, but at the very end we have that modifier, data 2. So it's making reference to the closing price of data 2. Pretty interesting. And of course, we have here the plot of the two momentums, the momentum of data 1 and momentum of data 2. The interesting thing is that data 2 can be a totally different symbol, or it can be the same symbol on a different time frame. So you could be calculating momentum on a 5-minute time frame, but you want to compare momentum to a daily time frame. In order for you to do that, you'd have to create a multi-data chart, set the two symbols to different time frame, even though they're the exact same symbol, and then do this type of setup where you're calculating on data 2 as well. And the last example that I'm going to show you is a strategy. Again, as I said at the very beginning of class, we're going to Probably not. We are going to create an example together so you can see how to set up a multi time frame strategy. Okay, as you can see on this strategy, let's go ahead and break it down a little bit so we can see what's going on. All right, so we have the inputs. We have a different length depending on the data number. So for data one, we have 13, and for data two, we have 21. We are calculating two averages, an average of data one and an average of data two. You can see that's just a straight function. The difference on the second one is that we have the modifier data two at the very end, so it knows to use the data from data two. And notice what the rule here is for the entry. If the close is greater than average data one, and the close of data 2 is greater than average data 2. So what we're looking for is for the price activity to be above the two averages. Here's a 13 bar average and a 21 average, and as long as the closing price is above the two averages, you're going to buy next bar at high stop. So this is a stop order at the high of the bar where the condition is true. Now, if the close is less than the average of data 1, then sell next bar at low stop. So what this is doing is just pretty much exiting the trade as soon as the condition is not true right here at the top. Okay, if you're not familiar with the easy language, this piece may have sounded like mumbo jumbo, but we're gonna break it down and make it work for you. So back here to TradeStation. I don't think there's anything else here in this PowerPoint. So yeah, let's go here to my TradeStation platform. All right, let's go ahead and pull up two symbols. Let's go ahead and take a look at $SPX. Okay. And I'm going to, this is on a 5 minute time frame. Let me go ahead and switch this to daily. Okay. And I'm going to add a symbol. This is the way that you, first of all, you open up a chart and you don't really think about it if you're not doing multi-data analysis. But as soon as you create a chart and you have a symbol in it, that symbol is data one. Now, if you come over here to the data menu and you say, I want to add a symbol, this is the way that you create a multi-data chart, because now you're introducing a separate symbol. I'm going to go here to add symbol, and I'm going to go to at ES. At ES is the futures based on the S&P 500 index. I'm just going to plot it. And now you can see the two on the screen. Now there are two, these are two. One is the index and the other is the futures based on the index. And you can see the values here are going to be slightly different because, of course, they are traded separately, but they're going to be close to each other because they're based on the same instrument. The index itself is based on the 500 stocks that make it or that are part of it. And then we have a futures contract based on that index. I'm going to go here to studies and click on add study because I'm going to show you the one that is built into TradeStation first. I'm going to scroll down here to an indicator called spread diff, and I'm also going to add spread ratio. One thing that I want you guys to remember about these studies is that they will require a multi-data chart. If you try to add a spread diff study onto a chart that does not have a second data stream, you will get an error. I wanted to show you that first. Let me go ahead and remove the S&P futures at the bottom. I'm going to go to studies, add studies. I'm going to try to add that same study again, but without having data to. I'm going to click OK. And you can see that I get this event log. A lot of times you get a pop-up and we don't really read what the message is. But if you look over here at the top, the event says spread diff. It's missing data too. Please set up your chart data. So whenever you add a study and you don't get anything on the chart, but you get this pop-up, the pop-up will provide information as to what happened. It added the study, but the study is unable to calculate because you're missing data too. So if I come here to data one more time and I click on add symbol, I'm just going to add the same symbol again. One thing to keep in mind is that once you respond to that message and you rectify the chart and you add data to, you are in a position where you can add the study again, but the study has been already added. What TradeStation did is that since it was unable to do the calculations, it turns the indicator off. So when you fix the chart, all you need to do is go back to the list of studies and turn it on. So I'm going to go here to studies and then click on edit studies. If you add it again, you'll have two instances of the spread diff indicator, but I just want one. So that's why I went to edit studies and I'm just going to turn it on by clicking the status here on the right hand side. Status. turns the status of the indicator on. Just click on status to turn it off. A lot of times, if you have multiple studies in a chart and you want to turn these on and off, this is a great way for you to do that without having to remove it and re-add it again when you need it. So it's a quick way for you to turn those on and off. I'm going to click on close. And this pop-up is interesting. And I like that this happens to me because it provides me an opportunity to explain what a lot of these pop-ups in TradeStation mean. This one in particular says scaling change warning. The scaling settings have been automatically changed for the following symbols and or indicators. And if you look at, it's referencing my spread diff study, and you can see that the summary says axis scaling has been changed to no axis. The reason why I got this message is because I added the study and then I added the symbol. And what the charting application did is it put my data too, which is the S&P 500 futures, it mixed it with the study. And you can see that one is overlaid on top of the other. Now I can keep it that way or I can change it. One of the things that I would do, for example, is grab the study and just put it in a separate subgraph. The chart on TradeStation can be split into multiple subgraphs. Right now, I only have two. I have the top one where the index is, and I have the bottom one where the futures and the indicator are. What I can do is just click on the red line. I'm going to drag it down. Notice that right now I see, let me try that one time. Okay, you see, if I'm dragging it down, you see the little hand right there on the subgraph. But as soon as I reach the bottom of the subgraph, you're going to see how the hand switches to a little plus, implying that I'm going to be adding that study to a separate subgraph. So I'm going to drop it here. And now it's going to ask me, okay, when we first had the warning, it said the indicator has no axis. I just switched it to no axis, turned it off pretty much. Now it's asking me, where do I want to put the indicator? Have an axis? Yes, I'm going to put an axis and it's going to be on the right as the other items on the chart are. So they have the axis on the right. I'm going to click OK. And there we go. Now the chart is divided into three separate subgraphs, two symbols on top, and then I have the indicator at the bottom. And if you look at the indicator, now this is a chart that's going back, I'm not sure how long it is, but let me go ahead and load 5 years of historical data. All right. Okay. Yeah, I can understand why this is happening. I was looking at the data here and I was saying, why does the data here for the difference look like this? I'm not sure how many futures traders there are here, but the reason why this is happening and why the difference is less and less, if you go here back in history, you can see how the difference is. This is back in 2024. The difference is about $400. But if you go here to the very front, you can see the difference about 50. The reason why the difference has gotten less, it's not because there's an actual difference here. Let me see how I explain this. Futures contracts, in this particular case, the symbol that I'm using, this is at ES. At ES is a continuous symbol and it's back adjusted. A continuous symbol is just a symbol that puts all the futures contracts that have a specific expiration date and it puts them all together and it aggregates the data and you see a continuation of prices going back in history. Otherwise, you would have to stitch those contracts together. But there's an adjustment that happens on historical data based on the differential between these contracts that are next to each other. So for example, right now we are trading the December contract for S&P E-mini. The September contract, which was the prior month, was also trading and it was trading at a slightly different price. So what the continuous symbol does, as soon as those symbols are put together, it applies a differential to the back month so that it aligns with the front month. Does that make a difference? Does that make sense? Pretty much this is what you see here. As you go back in history, the adjustment becomes greater and greater, and that's why you have this more of a diagonal line. It's interesting, but the difference is not pretty accurate because of this adjustment that happens on the S&P E-mini. Whew, that's a mouthful, but I wanted to explain why the difference was in this diagonal type of thing. I believe that if you were to, let me go ahead and modify this. And when I go here to the lookup, there is a way for you to create what's called a custom futures, which is not adjusted, or pretty much you can choose whether you want to adjust the data or not. So I feel like I'm going on a tangent, but I just felt like that I had to explain this. I'm going to put in the root of the symbol, which is ES. It automatically selects all the contracts that are associated with it, but I'm going to select this option where it says back adjustment method, and I'm going to go here and I'm going to say unadjusted. Don't change the data. Just leave it the way it is. I'm going to use, you see how the symbol changes? But I'm going to use this different symbol because now it's going to be unadjusted. I'm going to click OK. There we go. Now look at the difference, you know? Now the difference is not just a straight diagonal. You can see exactly where 1 month switches to the next because you see this spike going from one value to the next, okay? But aside from the complexities of a futures contract and what is continuous and what is non-adjusted, the concept here is that we're taking one symbol and subtracting it from the other. That's what we're doing, and we're creating a raw difference between them. And this study that calculates that difference is only able to do that if you have the two symbols on the chart from the beginning. If I go to studies and I go to add study and I add the spread ratio, it's exactly the same concept that we talked about, the type of study that is looking for two data streams. But in this case, instead of subtracting one from the other, is dividing one by the other. So if I click OK, that's what I see here. Division between one and the other. All right, let me go ahead and remove all this and remove all this at the bottom. I'm going to remove the S&P 500 futures. And yeah, this is fine. I'm just going to show you what else can you do. And we're probably going to create a strategy of our own so that we can create it from scratch. Okay, so let me go here to my development environment. That's not my development environment. In fact, I don't think I have it open. So let me go ahead and go to apps and click on Easy Language. Okay, so we're going to do a quick strategy so we can see this in action. Okay, so I'm going to go here to new and I'm going to click on strategy. And this will be at MC multi-data, SMA. These are just simple moving averages. I don't want to use a template. I'm going to create my own code. Okay, and I'm just going to click OK. Perfect. And what I want on this strategy is to look at two moving averages, very similar to the one we saw in the PowerPoint, where as long as the two symbols are above the average, I'm bullish. Whenever one of them is below, then I want to exit the trade. Okay, let's go ahead and take a look at. So I'm going to do SMA data 1 and SMA data 2. Notice that I'm just typing in words that I know that I want to use right now. They don't have any special meaning because I haven't declared them, but just a little bit about how to set up your easy language and your calculations. Let me go ahead and make the font here a little bit bigger so that you guys can see it better. I'm going to do a 16. All right, so for the data 1, simple moving average, I'm just going to use the average function, and I'm going to say average close of data 1 for, let's see, SMA 1 length. All right. There's a couple of things that are happening here. On the examples that we saw in the PowerPoint, we were not using the word of, which is okay. The word of here is more of a, what did we call it before? This is just a type of word that provides you a little bit more legibility on the syntax. It provides you a reference point to make the concept a little bit more clear. Notice how the word comes up in green because it's just a word that Easy Language is going to skip. I'm not sure how familiar you are with Easy Language, but anytime you type in notes or things that you want to be skipped by Easy Language, it's just going to turn that text in green. So the word of doesn't have any special meaning inside of Easy Language. It just makes my statement a little bit more readable in terms of this is using the close of data 1. This is like saying the order action when you say, I want to buy at market. That word at has exact same meaning. It just means nothing to Easy Language. But when you're looking at it, it just has that extra information that just makes the statement a little bit more clear. So close of data 1. One thing that I wanted to remind everyone that I don't necessarily have to use the modifier of data one, because if I remove it altogether, Easy Language is going to assume that when I use the word close by itself, it's going to be for data one. But if I'm creating a multi-data type of strategy, I like to have the of data one just for consistency and just for a little bit more clarity. Okay. I'm going to come over here to the second data, and this is going to be the average of the close of data two for SMA2 length. Now, these words that I have here that are in black, Easy Language doesn't have them. I made them up. So these are like my variables, and this is like an input that I'm going to assign a particular value. So let me go ahead and do those here at the top. Again, I'm not sure how much understanding you have of Easy Language, but you do have to declare inputs and you have to declare variables if you're going to use them inside of your code. So for my input declaration, my inputs are SMA1 length, exactly what I used in here. And I'm going to start that as an 8. All right. And then the other one is SMA2 length, and I'm going to start that at 21. 8 and 21. And I end that statement with a semicolon. That's just a way for you to tell Easy Language you finished that statement. You're going to go on to something else. Skip word. Exactly, James. That's exactly what I was looking for. James has been around for years with TradeStation, and he's very knowledgeable in Easy Language as well. So thank you for sending in that comment. That was exactly the term I was looking for. It's a skip word that Easy Language will just ignore completely. Thank you. And here, let's go ahead and declare my variables. Variables, it'll help if I spell variables correctly. And my variables are SMA, data one, which is numeric, and the other one is SMA, data two, which is also numeric. When I say a numeric variable, it's just because it's storing a number. Once this calculation happens, it creates an average, and the value that gets returned is a number. And that's why we initialize these variables as a numeric variable. There are going to be different types of variables. We have true false variables, we have text variables. So depending on the type of information that variable is going to store, you have to initialize them differently. These two are numeric, and the way that you initialize them is just by putting a number inside of parentheses next to the name, and then Easy Language will know that, oh, that variable will store a number. Okay, now that we have the calculations in place, all we need to do is create our rules. Okay, so I'm going to say, let's see how we do this in particular. We can create additional conditions. Let's see. Well, I'm going to do it this way. I'm going to create multiple true false conditions as well. So I'm going to do this a data one bullish, and I'm going to initialize that to false. Now, this is a true false variable. Notice that gets initialized with a true or a false word inside parentheses. And then Easy Language knows that the expression will hold a true false variable. So data two bullish. And I'm going to initialize that to false as well. So what is data one or data two bullish? Data one bullish equals the close of data one is greater than SMA data one. Does that make sense? So as long as the close of data one is above the average, I'm going to call that data one bullish. And data two bullish equals the close of data two is above SMA data two. So as long as the two are true, then I'm going to say that we are in a bullish mode. I'm going to set up a trade. So this is my action to place that trade. The action is going to be if data one bullish and data two bullish. So as long as the two conditions are true, then I'm going to buy next bar at market. I'm going to do a market order just to simplify things. Okay. And I can just continue this without having to create another if then statement. I'm going to do a combined if then else statement because it just provides me a way of creating another alternate action. So as long as the two conditions are true, then I'm going to buy next bar at market, else sell next bar at market. What is this else? Else means that whenever these two are not true, as long as they're both true, we're bullish and we want to buy. Else, if any of those, are not true, then, or if both are false, then I'm just going to sell and get out of the market. Let's go ahead and verify this. I'm going to verify. I have a mistyped length. Okay. Notice that when you verify, EasyLanguage is going to go through all the code and find things that are an error. And it's going to highlight specifically what is an error in your code. So what happened here? Why is it giving me a data 2 bullish? The reason why it's highlighting this is because it does not match my variable declaration statement. If you notice here, my variable is missing an A. And it says, oh, there's a mismatch. I'm not able to understand this word because you didn't declare it. So as long as I put in another A here and verify again, then you can see that verification is successful. There's actually a little pop-up that shows up. I've disabled it, but now my strategy is good and I should be able to use it. Let me go here to the chart and set it up. I'm going to go here to my chart. I'm going to set my symbol here to, let's do SPY. All right, for SPY, I'm going to turn this into a 5-minute chart. And I'm also going to add a second data stream. Remember that you have to set up the chart before you add the strategy. Any strategy or indicator that is referencing data 2, which we are in our code, if you don't have the second symbol, it's going to generate an error. So I'm going to add the symbol first, and I'm going to do .x. All right, so we have two different symbols, spiders on top, an SPX at the bottom. I'm going to add the two moving averages as well. So I'm going to go to studies and add study. I'm going to do the moving average, the simple moving average. I'm going to prompt for editing. I like to check this box before it goes on the chart so that I can make the modifications I need. Notice that when you add a study that has multiple symbols or multiple streams, if you go to the General tab, you have this drop down that says Base Study On, and you can choose which symbol to plot it on. Now, this is pretty cool because it opens up the ability for you to add studies to the data stream that you want. So I'm going to go here to, let's just leave it on Spider, and I'm going to go here to the inputs, and this is going to be an 8-bar moving average. Let's see what the style is. I'm going to make that line thicker, and the color right now is set to blue. That's fine. Okay, so you can see the 8-bar moving average right there on the screen. And I'm also going to add another study that is another simple moving average, but this time I'm going to go to the General tab, make sure that average is set to the second data stream. I'm going to go to the inputs, and we said that's going to be a 21-bar moving average. And for the color, let's go ahead and change it. I'm going to change it to a yellow. And the style, let's make it thicker as well. All right, there we go. So now we have the 8-bar moving average on the top, and then we have a 21-bar average at the bottom. Let's go ahead and put the strategy on and see how it follows our conditions. Okay, let's go here to Studies, Add Strategy, and our strategy is at MC multi-data. It's this one right here, multi-data SMA, the one that we created. I believe that this is one that I had there before. This is the one that we created just now. And I'm just going to click OK and OK. So this is a strategy that is going to look at the two symbols. I want you guys to take a look at here on the top left. And you can see that on this particular bar, actually the one before it, we had a closing transaction above the bar. When here SP or SPX was also above the bar. So at this particular place, both symbols were above the moving average. What happens next? We entered a long trade. You can see the blue arrow right there on that bar where my cursor is. It says buy 100. And it holds that trade until what happens? If you look on this candle, we had a closing price below the line and it triggered our selling transaction. The SPX had not crossed below. We have a smoother moving average on the index. So you can see that it didn't enter a trade. First of all, because we don't have a short side on this strategy. We only have the long side. So notice that we sold, it kept us out of the market. You can see how SPY crossed above, but because the index itself did not cross above the average, it didn't do anything. Remember that the strategy only takes that trade whenever both symbols are above the average, like over here. SPX crossing above the average, same happening on the ETF, and you can see how the trade is entered until either one crosses below. Now we have the selling transaction. Now we have, of course, multiple trades over here in today's trading activity, just because the price activity has been sitting on top of that line and straddling that line on either side, and it's just creating back-to-back trades that are not profitable. We can see that the strategy historically is doing as we intended it to do. Is it a good strategy? I don't know. I haven't tested this. Let's go ahead and see and test it. I'm going to go 6 months of historical data and then go here to data and go to strategy performance report. All right, so in 6 months of data, we have 142 trades. Yeah, not good. A total net profit of only $700. You see the gross is 4,100. It lost 3,300 out of that. So yeah, the strategy needs a lot of work. Even though it's net profit when it's breaking even, it's not a good strategy. If I go here to the performance graphs, you can see that the equity curve line is not pretty at all. It should be somewhat going up and it's going down at the moment. But the idea is not to build a strategy that works for us. It's just the ability for us to create a strategy that references multiple data streams. And I think we accomplished that here on this class. All right, let's open up the floor to Q&A. I know that Sebastian had a question. Sebastian, if you remind me of what your question was, I'll probably do it here because I think I have access to my email. Hold on just a moment. Let's see. I found it. Okay. Your question was regarding symbol linking, and coincidentally, you were talking about multi-data streams, right? Let's go ahead and take a look. So Sebastian's issue is that he has a multi-data stream, and I think the answer is going to be that TradeStation does not support that type of behavior. But let's go ahead and take a look. I'm going to open up Radar Screen, and I think what Sebastian is looking for TradeStation to do is to update multiple symbols within a chart. Now, if I link my radar, let me go and add a list of symbols here. I'm going to do the Dow 30 because in Sebastian's example, at the same symbol, I'm just going to change the symbol here. I'm going to change the bottom symbol to SPY as well. Let me remove the strategy so that it's not distracting. I'll remove this indicator and I'll remove this indicator as well. So now I have a 5-minute spider on top, a 5-minute spider at the bottom. I'm going to link my chart over here to my radar screen. So when I click on Apple, it changes both symbols. Okay. I think in your case, if I don't recall incorrectly, you wanted to link the two symbols and make sure that both symbols were changed. They were different time frames. So let's go ahead and make this bottom one a daily. All right. So now we have 5-minute on top and we have daily at the bottom. Everybody sees that? So if I click on a different symbol like Amgen, see my two symbols get updated. I think, Sebastian, in your case, you were not seeing the two symbols update, right? Was that the case? Okay, in your case, subgraph 2 wasn't changing. Now, when you click on the chart, and this is something that is important because you may have to build a chart again from scratch, you're not clicking on the actual symbols because if you click on the actual candles, like for example, you can tell that I clicked on my candles because there's some white boxes on top of it. So let me go and click outside. You see the white boxes go away. If you click on the candles, the white boxes come on because it assumes that you've clicked that. If you click on the candles and you click on a different symbol, it still changes both though. I'm not sure why yours, because the only way that I can see this happening and maintaining the bottom symbol is if the symbol at the bottom were a different symbol. Let's go ahead and add the Dow Jones right here at the bottom. So now we have American Express on top. We have Dow Jones at the bottom. Let's see if I click on Disney. You can see how the top symbol is the only one that changes. See Disney? and do remains at the bottom. If I click on Home Depot, so the top one is the only one that changes. So this is, I believe it's the way that the chart is started. I may be wrong, but we're going to do a couple testing here just to make sure. Now I'm looking at the behavior that you're describing, Sebastian, where only the top symbol changes, where in some situations, that's exactly what I want TradeStation to do, especially if you're doing like a comparison or relative strength against a benchmark. The benchmark in this case being the Dow Jones, and you just want to switch the top symbol and compare that symbol against your benchmark. Maybe this is the behavior you want, where you only want the top symbol to change. Now, if I come here and I click on the bottom candlesticks, and I'm going to match the top symbol. So I'm just going to click on the bottom candles, type in HD and hit enter. So now my top and my bottom are both HD. Then if I click on any of the symbols here on my radar screen, let's click on IBM. Now both symbols are set to IBM. If I click on 3M, then both symbols are on 3M. So what I want you to do, Sebastian, is, yeah, the screenshot you sent me, the two symbols, yeah, in your case, the two symbols are different. That's the screenshot you sent me. So manually make sure that one of the symbols gets changed so that you have the exact same symbol at the top and at the bottom. Once you have the two symbols aligned, you should be able to click on any symbol in your radar screen and both symbols should switch. Okay, I think that is the expected behavior on TradeStation. So yes, when the symbols are different and you have linking turned on, only the top symbol is going to change. So you have to manually adjust the symbols so that they're both the same, and then the linking should just apply to both symbols since they're both the same. Okay, I'm just going to hang out here until you try that, Sebastian, and let me know if that fixes your issue, okay? Okay, perfect. That's my class for today. Hopefully, the information about the multi-data analysis, one thing that I want to point out is that there's no data to concept inside of Radar Screen. Radar Screen has its own different way in which to bring in other data streams, and you can do that with a with an object, like an EasyLanguage object. It's a quotes provider, and it just brings in data into the indicator. So you don't really add a symbol inside of radar screen. The indicator that you're looking at is the one that brings in the data separately from radar screen, which is pretty interesting. If you want to look at indicators that do that, please post in the Easy Language forums, and we have a team dedicated to providing support on Easy Language and giving you ideas on how to set it up, okay? Marcelo, every class that we do here is recorded, and it should take us maybe a couple days to get it routed through our compliance department. They'll give us the okay that is ready to post, and then we'll post it on TradeStation. If you're looking exactly where those videos are, we just have to go here to TradeStation. Let me just pull it up here. Let me just go here to, that's not what I wanted. If you go to TradeStation, okay, and you go to the Learn section and click on Masterclass. Scroll down on the Masterclass section, and here's our recent uploads. We have our technical analysis classes, our strategy elements, and our Easy Language. It would be on this carousel that says Leveraging Easy Language. So take a look and watch the recording if you need it. And if you don't find it, please feel free to email us. Let me put in our email address right here on the chat window so you all have it. So this is education@tradestation.com. Guys, it was a great pleasure having you. Have an excellent afternoon, and I look forward to seeing you in one of my future classes. Goodbye, everyone. Great having you today.